Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 30th of January. As we approach the end of the first month of the year, it's been a fairly positive start on the whole. The latest boon has been that investors are hoping that the Federal Reserve will be able to engineer a soft landing for the economy without pushing it into anything like a deep recession. So that's certainly been something that's been holding markets up. At the same time, we're not expecting volatility to decrease. We're bang in the middle of the earnings season where we've had some fairly mixed messages. On the one hand, around 2/3 of companies have beaten expectations, but on the other hand, it's largely predicted that earnings on the whole will decline for the quarter. We'll get another couple of clues next week. We've got the monthly non-farm payrolls report, as well as the two-day Federal Reserve policy meeting, where a 0.25% interest rate hike is largely expected. So, in the year to date, the Dow Jones is up 2.4%. Nasdaq is up 10%, undoing some of its losses from last year. Benchmark S&P 500 up 5.8%, and the FTSE 100 in the UK is up by 4.3%. Turning to next week, a couple of telecoms companies to look out for. Telecoms have been somewhat under the cosh. Firstly, we're looking for a third quarter update from Vodafone. Shares are down by about 27% over the last year, not helped of late by the uncertainty of a new incoming chief executive. But of course, in terms of these kind of providers, the main differentiator tends to be price at a time when availability and reliability are very much taken as read. And that's made it difficult for Vodafone to expand its growth. Over the last 5 years, the shares really have struggled. It's also, against the inflationary backdrop, had to hike its own prices, which of course is not something it would ideally do in such a competitive market. So again, we may get some sort of update from Vodafone in terms of its general financial health, any European growth, net debt figures and so on. More positively, its multi-play offering is tending to make its customers rather more sticky on that front and less likely to move elsewhere. And there are also some promising signs coming out of Africa. Another telecoms company which has had something of a hard time is BT, also due to report Q3 numbers. Shares down by 33% over the last year. Energy and wage inflation certainly not played into its hands. It's announced a rather large target of a £3 billion cost-cutting measure. Remains to be seen whether that can actually come to fruition, of course. On the plus side, its OpenReach arm of the business has tended to fare quite well over recent times, amid calls for it to be spun off, of course, but no more news on that particular front. And a slight concern there that the company might be quite reliant on its tie-ups with Sky and TalkTalk. And finally, Shell has got its full year numbers. Obviously, a strong oil price has helped over the last year. Shares up 24% in the last 12 months. So again, the sort of things that we're going to be looking out for in terms of their results is their cash flow, again, net debt position, what any progress might have been made on its renewables investments, and also gas trading, which has picked up some of the slack when the oil price did weaken on a temporary basis. Yielding around 3.4% at the moment, and again, given its cash flow, there could be the possibility of further share buybacks. Thank you for watching. Have a great week.